Because you either completely collapse the economy because the government interest payments take out all of economic growth and shrink, plus the private sector, or the balance sheet needs to go exponential, which would be horrific.
Welcome back to Library of Wealth. In today's episode, we have Real Vision's CEO, Raoul giving us his ideal scenario for a crypto bull market, leading to significant price surges in prominent cryptocurrencies such as Bitcoin, Ethereum, and Solana. Pal is particularly positive about Ethereum and Solana, as he foresees their diverse applications attracting investors and propelling them to at least 5 times their previous lows. He also discusses why his bullish prediction is based on crypto fundamentals and upcoming macro events. He points out 2 factors specific to the cryptocurrency industry that will contribute to the coming bull market, which will bring in massive gains for crypto investors. After the ongoing wave of regulatory clarity for cryptocurrency, with regions like the EU, UK, Switzerland, Australia, and Hong Kong already established, the US is one of the major players that lags behind. The coming weeks will be a major indicator for institutional investors to be more comfortable allocating a portion of their vast portfolios to crypto. Raoul discusses the implications for BlackRock and believes this further bolsters the case for an imminent crypto bull market in 2023. Let's get right into the latest interview with Raoul as he gives his market prediction for Bitcoin and crypto and what the economy can expect moving into the last half of the year. Don't forget to share your thoughts and comments down below and leave a like if you enjoy the content we do here.
The big thesis is, I don't believe with an aging population and high debt that you can have sustainably high interest rates. And I've proven in the everything code that the entire increase of the central bank balance sheet of the US, the UK, and Europe and Japan is just the monetization of interest payments. So what they're doing is just debasing the currency to pay the interest because the interest payments are too high. And that tells you we're either going to get massive central bank printing with rates of 5%, or they're going to have to get rates back down again fast. And that's what I think the game is. I think with trend rate of GDP at 1.75% in the US, you need to get interest rates down to the same kind of level because the government is 100% of GDP in debt. So if interest rates are 1.75% and growth is 1.75%, then all of GDP growth just goes to pay the government debt. That is not sustainable considering the private sector is another 120% of debt. So this is the game in town. That's what the everything code is built on. If you have this framework of understanding that they have to get rates down to GDP growth or below, so that tells you the world doesn't function with rates above 2%, let's say, 1.5%. So to absolutely ensure they need to do it, they need to stamp out all inflation expectations now, so then they can cut it down to 1.5%. That's what is going on, because they know they have to refi at 1.5% or less. If not, the balance sheet goes exponential.
When is the refi due then?
It starts at the back end of this year and it's really in 2024 and 2025. Huge problems, because you either completely collapse the economy because the government interest payments take out all of economic growth and shrink, plus the private sector, or the balance sheet needs to go exponential, which would be horrific, because then asset prices go, you lose control of the system if you're not careful. So this is, I think, the game. This is why Jay Powell is being so obstinate about rates, even though everybody and their dog with a basic understanding of forward-looking economic indicators can tell that, we've killed growth and killed inflation. He just has to get that inflation expectation down so they can cut rates to 1.5%. If he can engineer headline inflation to go negative, which I think is going to happen, he's got the green light to cut back down to 1.5%. Once you understand this, and look, Yellen ran the Fed. There is no difference between the BOJ governor and the Ministry of Finance. There is no difference between the Treasury and the Fed. There is no difference between the ECB and the governments. They all are in this together because nothing works unless they do, and they all understand the game. We can forecast debasement based on either trend, or we can base it on the interest payments, or we can base it on demographics. They all come to the same thing. And if I can therefore forward forecast liquidity, and liquidity, which is debasement, a lot of people are misusing liquidity in how I think of it. Debasement is how I look. If I can forecast it out to 2026, and the NASDAQ has a 97% correlation, I can forecast assets out to 2026. This is a thesis, a hypothesis, which is why I don't release any of these targets publicly. But what it suggests is it's all one trade. So then, as I said, you just want to buy the biggest performing asset. So I've been saying this beginning of the year, all of last year, this is what's going to happen. And if I look through the asset growth now, so obviously Bitcoin is up 83%. The next biggest is my exponential age basket, 71%. Then the NASDAQ, 42%. Then the S&P at 17%. So it's showing itself exactly as I expected. And that's without much monetary stimulus. Basically, monetary stimulus has gone sideways, but year-on-year rate of change is going up. Kathy was kind of at the peripheral for me. I'm a macro guy, right? And tech always looked overvalued. And so I didn't really like it. I understand there was a lot of technology coming and it was an interesting space, intellectually interesting. But as a macro guy, I just didn't understand it. And it was not until I saw the debasement of currency and then figured out that the NASDAQ outperforms it all, that I'm like, what do I not understand here? And then I started seeing the big picture, which was what I refer to as the exponential age, this nexus of all these technologies coming together and completely disrupting everything that we know. And that my expectation was back in 2020 that we were going to see the largest pace of technological change the world had ever seen in the shortest period of time. Because many of these technologies had been worked on, but were now getting ready for public release. And blockchain was one of them. So that was the fastest adoption of any technology the world had ever seen. But my thesis was built around AI, robotics, data, compute, Internet of Things, genetics, genetic science, EV, all of these things, this big picture space. And I realized, oh my God, this is all going to happen at the same time.
Powell points out that the global economy faces challenges due to an aging population and high debt in developing countries, making the current high interest rate environment unsustainable. Raoul anticipates that central banks, including the US Federal Reserve, will soon reverse their strict monetary policies, possibly including the much-anticipated rate cuts the economy desperately needs. Raoul Powell foresees a scenario of inevitable currency debasement affecting all fiat currencies. This devaluation will result in asset price gains, but it primarily serves as a means of wealth preservation rather than actual wealth growth. Despite the apparent increase in asset prices, the declining value of the currency offsets any real financial gains. In such an environment, Powell believes that tech and crypto assets are the best options for preserving and increasing wealth. These asset classes are better equipped to counteract constant fiat devaluation, presenting opportunities for real growth. He anticipates that central banks will inject billions of dollars into the economy in the near future. And this infusion is likely to trigger substantial rallies in the cryptocurrency markets, further emphasizing the potential for crypto assets to thrive amidst the prevailing macroeconomic conditions we're seeing now. What do you think about Raoul Powell's market prediction for 2023? And how will the bull market in crypto play a factor in the economy moving into the last half of the year? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.